Here are the top 4 reasons why the wealthiest families and largest corporations all invest in the commercial real estate. Breaking it down from the top, most investors are investing because of wealth preservation, where they're not going to lose their money and it serves as a hedge against inflation. The second reason is monthly cash flow. We'll go through exactly what this looks like. Third reason, and one of the biggest reasons why investors are putting money into real estate, which is the tax advantages. With the new Trump administration coming back and reenacting the tax bill, the big beautiful bill, this is igniting a ton of capital back into commercial real estate and all of the depreciation you can use to offset current income. And then number 4, which is forced appreciation. This is huge for value add investors like us in comparison to single family homes, where you have no control over what the building's worth. You have so much control in commercial and specifically multifamily. So now let's go ahead and let's jump into a deeper understanding of each one of these. Starting with wealth preservation. Now this one's pretty simple to understand. Cash, which is just regular dollar bills, if you let it sit in a bank account and do nothing, it's going to go down in value over a long period of time. And that's because of this little known thing as inflation. For example, if you had $100,000 sitting in a bank account back in 2022 and you haven't done anything with it up until 2025, the account balance is still worth $100,000. However, your purchasing power has gone down by about 25%. So what you could buy in 2020 for $100,000 is about $125,000 today, only 5 years later. And so whenever you invest into assets like a multifamily apartment complex or even a shopping center, it serves as a hedge against the inflation because rents are going up and your asset value is going up. And so you're storing the money into an asset and it's not going down in value. In fact, it's paying you every month and it's going up in value and you keep the asset safe. That's number 1. Now moving into the second reason, which is the monthly cash flow. This gets everybody excited because true financial freedom is when your passive income from your investment portfolio supersedes the amount of active income that you're trading your time for. That is true financial freedom. So if you earn $10,000 a month in your job and you have an investment portfolio that pays you monthly cash flow of $10,000 or greater, you are therefore financially free. And so what does this actually look like on most apartment deals or most commercial real estate deals? Very similar to like you investing into a stock and getting a stock dividend, you're investing into an asset that pays you cash flow every single month. And this is generally ranging between 6 up to 8% per year. Now there's always caveats where you could have lower cash flow but more upside, or you could just get it at a steal and you could have double-digit cash flow returns. It varies from asset class to asset class, but generally understanding a 6 to an 8% annual cash flow return is pretty typical in the commercial real estate space. For example, if you invested $100,000 with me into one of our apartment deals, we would pay you a 6% annual return in cash flow, which is $6,000 a year, and then divide that by 12, it's $500 a month. You get the cash flow and you get to know that you're preserving your wealth by putting it into the asset and you're being paid cash flow every single month from the rents being collected. Topping it off with the last 2 is why so many people jump into this business. So how the tax advantages work in a simple world is we're going to use 2 main things. One is a cost segregation study, which is an actual study. You hire a bunch of people, they come out and they break everything out between the land, the physical building, and then they break it out into 3, 5, 7, and 15-year life. I won't bog you with the details, but it basically gives you a report of all of the items that you're able to depreciate. And then we use what's called bonus depreciation, which is the IRS's rule book that they wrote. We're able to use all of the depreciable items and fast forward it into the first year. So in theory, we're buying a building and preserving the wealth by putting the money into the building and not keeping it in cash. It pays us every single month from cash flow. And then on top of it, you're able to depreciate and show a massive paper loss, even though the building could be going up in value and paying you to own it. To simplify it, say you invested $100,000 with us, that's our minimum. We would pay you the cash flow every single month. And at the beginning of next year, we're gonna send you a K1 partnership form. And if you invested $100,000, you could anticipate anywhere between $50,000 up to $100,000 of a loss on paper that you might be able to use to help offset some of your tax bill. Now, quick disclosure, not a CPA. Ask your CPA for the financial advice. But from a personal standpoint, we have benefited greatly from the tax advantages that come in this business. And moving into the last one, which is the forced appreciation. As value-add investors, this is one of our most important aspects of why we jump into these deals. Now, diving a little bit deeper into what that means, in commercial real estate, everything is based on NOI divided by a cap rate. NOI is the net operating income at the building. After you've collected all the income, paid all of your expenses, it's what's left over. That's your NOI, and you divide it by a cap rate. This is a valuation metric, and that determines the value of the building. So for every $1 that you can increase the net operating income, it adds anywhere between $18 to $25 worth of value. So if I'm able to increase NOI by $1, I increase value by 20. If I increase it by $100,000, then I increase it by $2 million worth of value. So you can start to see, instead of comping it out next to a bunch of single family homes, commercial real estate offers you such a more controllable exit pathway. Now that you understand the main benefits that investing in real estate has to offer, a lot of people will have to choose, do you want to be the passive investor or do you want to be the active person that's going out and making all the deals happen? For us, we're the active real estate investor. We go out and source deals, we find it, and then we partner with passive investors that are looking to get all of the benefits of what real estate has to offer without having to do any of the headwork. That's generally the next step in the process of determining how you get involved with it. But regardless, whether you're participating actively or passively, you need to know the main reasons of why people are investing in the commercial real estate. And so if you're an investor, you're looking to get around other investors across the country that are actively going out and trying to do deals and just find a community that's focused on investing in the commercial real estate, I'd highly recommend checking out our community called the Deal Room. For only $67 a month, you're able to show up to our weekly calls, connect with other like-minded investors across the country, get access to training, tools, and all of the resources that you might need to get started in your commercial real estate career. All you got to do to get more information on that is check the links in the description. And as always, if you found any value throughout today's video or feedback or questions specifically about any of these points, make sure you drop a like, comment down below, and most importantly, make sure you're subscribed. So I'll see you in the next one.